the idea of cutting rates and yes, the dot plot says March, but the futures market says January. There is no way they should be cutting rates. We're not even back to the middle of the range. We're at the very bottom of the normal range over the last 70 years. Any long duration asset is going to rise as interest rates fall, your discount rate changes, and people start dividing future cash flows, which are uncertain, by a lower number, and the net present value goes up.
In a significant shift, the Federal Reserve signaled that its campaign of anti-inflation rate hikes is likely over. Mark Yusko, the chief investment officer of Morgan Creek Capital Management, warned that the Federal Reserve is on the brink of making another significant mistake in 2024. Fed Chairman Jerome Powell kept interest rates steady at the FOMC meeting this week, making it the third policy meeting that saw interest rates unchanged. And while Powell acknowledged that any reversal in current inflation trends could spark the Fed to resume its interest rate cuts, more of the talk was focused on rate cuts. In contrast to past communications, Fed officials also indicated they don't expect to raise the rate any higher to reduce inflation to a 2% annual rate. Yusko pointed out that we're currently situated at the lower end of the historical rate spectrum spanning 70 years, far from the midpoint. This positioning renders implementing rate cuts unwarranted and divergent from established historical trends. The December FOMC was dovish, leading markets pricing about 90% chance of a Fed rate cut by March, Bank of America said in a Thursday note. Wall Street scaled a fresh all-time high on Thursday after the Federal Reserve signaled that it would cut borrowing costs next year. Yusko highlighted the massive deficit, suggesting that the strategy revolves around keeping people content by inflating home values and sustaining 401ks. This, according to him, boils down to market manipulation. Now, let's focus on the video to explore more. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
You go back to January this year, and that was supposedly going to be the most important, FOMC because, the Fed was going to pivot. They were going to stop raising rates and they were going to pivot. And that's why the markets took off. They never pivoted. He never pivoted. Like the whole year.
Yeah. Kept
raising rates. And everybody's like, oh, well, he's going to pivot next meeting. He's going to pause. And it's amazing when you go back and you look over the course of the year, how people just like cut him a pass and pushed valuations up back to nosebleed levels in terms of PE ratios and price to sales. Oh my God, some of the craziness. And yet he did nothing. And so to your point, now he finally says, yeah, we're probably, he didn't say it this way. Yeah, we're going into election year and I kind of want to keep my job. So yeah, I'm gonna lean dovish for next year. And this is insane, right? The people, and I was probably in that camp, that were recession watchers at the beginning of the year have been befuddled, right? There's been no recession. I mean, in fact, we've had pretty spectacular growth in the first couple quarters of the middle two quarters, second and third quarter. Fourth quarter is looking a little weakish, but that's not come to fruition. And so the idea of cutting rates and yes, the dot plot says March, but the futures market says January. There is no way they should be cutting rates. We're not even back to the middle of the range. We're at the very bottom of the normal range over the last 70 years. It's nonsense. This I don't know, Pavlovian interaction, like we got to keep the stock market up. We got to keep the stock market up. And I get it, right? The liabilities, the federal government liabilities for Medicare, Medicaid, Social Security, et cetera, can't be funded, right? It just full stop, can't be funded. We don't have enough money. We can't collect enough money. Got a big, huge deficit. So the only chance they have is to keep people happy-ish by keeping home values inflated and 401ks up. So I think that's what this is all about. It's just manipulating the market.
Yusko argued that the first and second quarters 2022 marked a recession, followed by an unforeseen economic expansion. Next year is packed with potential economic shifts, but many economists and investment analysts expect that the U.S. will likely avoid a recession in 2024 even as growth slows in the year's first half. The unemployment rate has remained below 4% for nearly 2 years, with the unemployment rate falling to 3.7% in November. Federal Reserve policy changes and pent-up demand for homes will result in a more competitive housing market in many states and continuing challenges for people seeking affordable homes and rentals. Even with tumultuous events earlier this year, such as the failure of 3 U.S. banks, the nation has not tipped into recession. We've got a few clips from the interview. Let's focus on those.
Look, we can debate endlessly. First and second quarter 2022, was that a recession? I will vehemently state forever it was. Now you can say, well, but employment never came down. Like, yeah, because you juice the numbers because of the way you don't count people over 65, whatever. Fine. You don't want to call it a recession. I don't really care.
Yeah.
Touch and go, right? Since that time, we don't have recession. We have economic expansion. Surprisingly hot. Now, I can make the case that the third and fourth quarter of 22 totally manipulated by release of the SPR for election purposes. Doesn't matter. That's how they count the numbers. That's the one thing is we can complain about how they count the numbers, but those are the numbers. So to say that there's a recession, well, but they didn't call a recession. So stock market went down 25%. That's a recession, right? 650,000 people lost their jobs in the tech space. That's a recession. But you don't want to call it, I don't care. Now we're in economic expansion for sure, right? 5% quarter? Come on. No matter how you look at it and say, well, but this doesn't really count because it's government spending and it's deficit. It's the number. And this quarter, it's heading towards 1. 2001 was called a recession. We had 2 negative quarters, first and third. They weren't even consecutive. The total yearly growth was 1%. Including 9/11, and that was a recession. Okay, this time we had 2 negative quarters. Total year growth was 0.9, so right around 1%, and they didn't call it a recession. I don't really care. So, but he got through it, and now he's fully in charge. We have a well-functioning economy. You look around. I mean, other than housing, and other than the third greatest banking failure in history. And the worst year for bank failures in history. So other than that, right, it's pretty good.
Yeah.
Now, if you're an employee of Silicon Valley Bank, you're not very happy with J-Powell. If you are an employee of Signature Bank, you're not very happy with J-Powell. But maybe it's not J-Powell we should be worried about. Maybe, and you said that crypto hasn't responded. Well, it's because crypto got whacked down because of Ms. Warren, Lizzie, as in Borden, she took a hatchet and she whacked up this crazy legislation. I mean, like crazy. Like you and I would be criminals, literally deemed criminals if her bill were to pass, you and I and just about everybody else listening on this would be criminals.
Though the economy occasionally sputtered in 2022, it has undoubtedly been resilient, and now, in the last month of 2023, the U.S. is still not currently in a recession. The Federal Reserve, following 7 interest rate hikes in the previous year and 4 in 2023, isn't aiming to prompt a recession but intends to moderate economic growth. What is your stance on the Federal Reserve strategy? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.